Alright, what's up you guys? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about why I am currently shorting Tesla stock. Now, I know this may be a very controversial subject, and honestly, this will probably be offensive to many of you watching. If that's the case, I'm sorry, but I will do my best from both a technical and fundamental perspective to rationalize my bearish arguments over the course of this video. All right, so before we go over the topics, I hope you guys all have a great 3-day weekend. Spend some time with your loved ones, eat some good food, and celebrate whatever you may be celebrating and whatever is important to you. So just wanted to get that out of the way. Let's cover some of the tabs I want to share with you, and then we'll dive into each one individually. All right, to kick it off, I have two segments from two different newsletters that I wrote over the past few days while I've been up here in Cali that cover my fundamental, at least the base cases of my fundamental bear argument for Tesla. So we'll cover this guy to kick it off. We will then cover this. I just finished writing this before recording this video. This is covering the big news that I'm sure many of you by the time this is uploaded will have heard. Mr. Musk, Big Elon, Papa Elon, has offered to buy Twitter out completely. Not just a stake in Twitter, but buy them out completely. So we will read over these two. Again, this pretty much just sums up my entire bearish case for Tesla from a fundamental perspective. I'll chime in as we read through this with any additions or any cherries on top if I feel necessary, but we'll read through this, cover the fundamental basis and establish our fundamental grounding, and then we will of course be diving into the charts. It's where I make a video while the markets are still open, but that's a little treat. So we will cover Tesla on the charts. I do want to cover the shorter term, so talking 1 to 2 week time horizons, but I also want to zoom out, and I do have Tesla on the 5-year chart here as well, so we can zoom out and just really take a look at Tesla from a macro perspective, because when you look at this chart, it's very important to keep in mind that in the past 5 years, Tesla is up over 1,500%, okay? In just the high that we saw in 2020, early 2023, or early 2022, 2020, there's a lot of twos in there, sorry. So 2/23, 2020, February 23rd of 2020, Tesla reached the high before obviously the pandemic lows, but Tesla was only trading, let's move my fat head, it's right, of course it's right in the way, come on. So Tesla was trading, as you can see here, at just $180 on February 23rd of 2020. So it's very important to keep in mind how far we've come. We're currently trading at just under 1,000. So we have over, I mean, what is that, like a 7x? We've 7x'd, not 7, like 7x, okay? A multiple of 7 since just 2020, just over 2 years. And although Tesla is an amazing company, it's still very, very difficult to justify this price. I mean, and it has a PE ratio of over 200, which we'll cover. I'm beating myself to the punch here, so let's read over this, you guys. But first, before we do, please give the video a like because I appreciate it a lot. Subscribe to the channel if you want to join the Waves family. And yeah, let me know in the comments down below. Are you a Tesla bull? Are you bearish on Tesla? Do you think this market's a little scary? Just let me know what you guys are thinking. But are you bullish or bearish on Tesla? Because that's obviously the subject of the video, okay? So I'll see you guys in the comments downstairs as well. You guys know I love Tesla as a company. I love Elon Musk. I'm a fan and follower of both. But I believe the stock is and has been overpriced. They're currently trading at a PE ratio of over 200. And keep in mind, you guys, a traditional PE, which is price to earnings ratio for a company in the S&P, is 15 and 20 on the high end. So the fact that Tesla is currently trading at a 10x of the high end of a historically fair PE ratio just puts things in perspective, and it's especially staggering when it's $1 trillion company, okay? So which can't be justified for a company at this scale in this macroeconomic environment, especially when you consider the fact that there's so much competition on the horizon with every legacy car maker on the planet getting into the game of EVs. So again, you name Ford, Kia, Audi, every single car manufacturer, legacy car manufacturer is creating their own iteration of an electric vehicle of their, I mean, just look around, okay? Mustang, Mach-E, I mean, I'm not even going to go on. You guys know the deal. But yes, they're executing another stock split. Obviously bullish for no reason aside from the psychological aspect of it. People see a cheaper stock, they think it's a discount, when obviously that's not the case. I assume most of you guys know that, but obviously that's just good optics and game theory. Yes, They're claiming they'll begin production on their humanoid robot. Shout out to this dude and my banger of an edit. Yes, they will begin production of their humanoid robots in 2023. At the same time, though, marketing can only take you so far, and I'm still waiting for my Cybertruck. So get those made and then focus on the robots after that, after delivering on your prior promises. I think that Tesla deserves to be a $1 trillion plus company someday, 100%, but that day is not today. They announced earnings on April 20th, 420. I mean, did you expect anything less? And I believe that they will be far less impressive than many of the bulls expect them to be. In my mind, this is the ideal way to play my theory that the correction will continue for overextended mega caps like we're seeing right now in the S&P, in the NASDAQ. And consider I'm bearish on both those two. Tesla is pretty much, I mean, Tesla's obviously, with the S&P market cap weighted, Tesla consumes a pretty significant amount of the S&P 500. And the S&P goes down, Tesla goes down, Tesla goes down, the S&P goes down. That is like kind of the cycle they're in. And Tesla, although it has such a staggering market cap, still trades highly volatile. So you can see the SPY is only down 0.9%. Tesla is down like 3.5%. And that's just a good example of why I personally decided to choose Tesla to short right now. And again, the obvious fact that just look at this, you guys. A lot of you know that I built the majority of the net worth that I hold today, and my trading career is pretty much based on capitalizing hype cycles and emotion and mania and just bull market cycles. And right now, when you look at this chart, this is a 5-year chart. This would make sense, maybe a 20, 30-year chart. But the fact this is a 5-year chart is staggering, especially when you consider the majority of it happened in just the past 2.5 years. So it's just, this is a staggering chart, you guys. Just, it doesn't take it doesn't take a super veteran trader to look at this and say that this is probably overextended. So there's that very, very base case technical argument, I guess. But again, you guys, there's just so many factors. The Fed's raising interest rates, which is bad for tech stocks. Again, Musk just covered Twitter, or Musk just put in an offer for Twitter, which potentially diverts his attention as an operator from Tesla. That's just the name of anything you do, you guys. If you pick up another hobby, if you pick up, obviously if you pick up something else that consumes a considerable amount of your mental capacity and mental capability, that will take away from your ability to do so in other realms of your life. Okay, so let's read through this and then we'll talk some technicals. All right. Today about a Tesla bot. In other news, Elon Musk offered to buy Twitter for $43 billion or $54.20 per share this morning. We all know Elon loves Twitter. He's also the richest man in the world by a landslide, so it's not surprising that he made this offer, especially after he bought up 9% of their float a few weeks back, making him their single largest shareholder. His reason for this, so he claims, is because he believes that Twitter is the most important platform for free speech around the globe and that it can be transformed as a private company. This means that if Twitter accepts this buyout, then it will no longer be a stock that can be bought on the public markets. This isn't very relevant to the portfolio, but it is in the sense that the news is having a negative impact on Tesla. I'm assuming that the primary reason for this is that investors believe if Elon takes Twitter under his wing as a new passion project, then it will take away from his focus on Tesla, kind of as we, again, the balance of mental capacity and mental capability. I don't know if I agree with this rationale, but I definitely think that it provides bad optics for Tesla. And this market is very, very objectively still optics driven and sentiment driven. So bad optics is bad for price action. Therefore, I remain confident in my short positions, which are already providing me with some beautiful returns. So this was this morning. It is Thursday, April 14th. This one was just from yesterday morning. And I did just go hard on some Tesla 855.20 expiration put options. Okay, so sorry if you guys are part of the newsletter, that's why I waited till the weekend to record this video, but hope you guys got in on that. And again, you guys, I don't like shorting stocks. I always prefer to be a bull. I prefer to be long, but I am if the market is the market doesn't care about your feelings, and if I have conviction from a fundamental and technical perspective around a play, and that play includes me to be short, even if it might hurt some people's feelings. That's the game. I'm trying to make money. I'm not trying to, again, you guys, I like being a bull. I prefer to be a bull. I'm an optimistic guy, but that's the reality of the markets. The markets do not care about your feelings. So sometimes you just have to disregard your feelings and play the rational case. Okay, so that's what I'm doing my best to do. If you guys Want one of these bad boys in your email inbox every single trading day during market hours. This is just the intro, okay? So this comes during market hours, then right after the market closes, I will write part 2 to the newsletter as well with charts on a day-to-day basis and give you guys real-time price targets and price action on some of our favorite names that we cover here on the channel. Okay, if you guys want that, along with the complete breakdown of my entire personal portfolio, again, I have these Tesla puts, but there's probably 30 to 40 other active positions in my portfolio at all given times. That is going to be the first link down in the description box below. $15 a month or $40 for every 3 months. I truly believe it is worth that, if not significantly more. But again, you guys, I appreciate it if you be the judge of that and you check it out. And if you don't like it, just unsubscribe. It's that easy. Okay, so first link down below, $15 a month, $40 for every 3 months if you want to know what I'm trading on top of these Tesla puts. Okay, so that is the fundamentals, you guys. Let's talk technicals. But first, again, it's just important, and I don't have much to say here aside from the fact that, once again, Tesla, $100 billion. I'm sorry. Well, I didn't even say 100 billion. I looked at that. But $1 trillion company, $1,000 billion company. So at a market cap of just under $1 trillion at the time of writing. Where is the PE ratio? So PE ratio of just over 200. Once again, when a historical PE ratio for the S&P 500 for all companies, and very few companies have ever been worth $1 trillion. So especially big companies, average PE ratio typically ranges between 15 and, once again, 20 on the high end. So the fact that Tesla is currently trading at a PE 10x on the high end of the average is pretty staggering. And again, you guys, considering we were trading, let's go back here. Okay, let's go back. And that's the high too. If you just go back to, the beginning of 2020. So January of 2020, Tesla was trading. Some of my fat head. Oh my gosh, it's irritating you guys. Sorry. At the beginning of 2020, where is it? Right there. Boom. Tesla was trading at sub $100 at $90. Since then, Tesla's over 10x in less than 2.5 years. We've seen over 10x, which for $1 trillion company. Again, Bitcoin, it kind of makes sense because Bitcoin is a completely different asset class, okay? Bitcoin is a currency. Bitcoin is similar to gold. Bitcoin's an entirely new asset within the financial markets. Tesla is still a company. Tesla is still subject, no matter how much good they're doing for the world, and I 100% believe that's true. Tesla is still subject to their revenue, to how much sales they can make, to how much they can scale out without competition. And again, Tesla is a tech company. Tesla will always have the tech and AI advantage on every other vehicle in the market. But the reality is the consumer doesn't think that way. And the consumer doesn't care if they're buying the Ford Mustang Mach-E, if they're buying the Audi e-tron. They're just going to buy whatever they like because although Tesla is a strong brand, I think especially for those of us who are involved in the equity markets, their brand can seem a lot stronger than to the average person, which when it comes down to the revenue aspect of it is ultimately what matters. It's about who's buying their cars. Because again, Ford, maybe they'd make the robots. They have a lot of plans to scale out in the future. And hey, I don't doubt the fact that they can execute on that. But right now, their revenue is dependent on cars. And that is going to, it would surprise me very much if that didn't significantly decline as money becomes more scarce, as the US dollar gains strength, as people are running out of capital, as people are traveling. I'm traveling right now. Delta Airlines just announced earnings. They're crushing it. When people spend on travel, when people spend flying around, buying hotels, that's going to take from the areas of the market that they spend. Okay, so when people are spending more on travel, they're going to spend less on shopping, on retail, on cars even. Okay, so that's just how you have to think. That is really playing the futures market in a sense, and that is why I'm bearish on Tesla. Okay, so just yet another reason I should say I'm bearish on Tesla. Okay, so that's the macro argument, you guys. I'm not going to go over the more medium term, so like a few months out and stuff, but I do talk about this pretty much every day in the newsletter, in part 2 at least, go over the charts. So again, go check it out if you're interested in that. But right now, I do want to cover the coming week or two out as we close out the month of April. Okay, so Tesla right now. Although it's broken out, although Tesla has staged a very, very impressive comeback over the past few weeks, again, you can see we're at like just above 750 just a month ago. Okay, so March 14th, we were at 750 a month ago. So over the past month to the date today, Tesla has staged an amazing comeback. Let's actually get a price range on this real quick, just out of curiosity, my own selfish curiosity. So from here to the high we saw, Tesla, jumped over 50%. I want to delete that. But Tesla jumped over 50% in the past month. But when you look at this, again, still a series of lower highs and lower lows. High, low, lower high, lower low, lower high, and it's only likely just based, I mean, again, it doesn't take a professional analyst to look at that, but it's more than likely to me that we go on to set another lower low, again, especially in this macroeconomic environment. All right, so short term, you guys, again, that did get a little macro, so apologies for that. But when it comes to my price target, talking just a week out, actually, April 22nd is when I think this will happen. I do think this head and shoulders will play out. Okay, so head and shoulders, shoulder, head, and then we're just about to resolve this this second shoulder right here. Okay, the opposing shoulder. Okay, and when you branch, when you get a time horizon, okay, a time scale on the base of the initial shoulder to the base, then jumping to the next shoulder, okay, it's 10 days. You guys get what I'm saying there. I scuffed that. But from the base of the shoulder to the peak of the shoulder was 10 days. You mirror that to this other shoulder. That takes us to April 22nd. Tesla's earnings, once again, April 20th. I think they're going to disappoint. If they disappoint, 2 days to give the stock time to fall, even if we do go sideways, I think is very reasonable. Okay, so on top of that, I do think this also perfectly aligns, which is beautiful, with the previous line of resistance on this descent, on this downward trend, just downtrend, which is still short-term series of lower highs and lower lows, establishing the lower high now. I do think that this previous line of resistance or this general trend line will hold over the coming sessions, which also perfectly aligns with April 22nd and a price target of about $760. Okay, so as always, you guys, I could be wrong. Always take what I or any analyst out there says with a grain of salt, especially in this chaotic market environment. But always know, you guys, my money's on it. Again, if you guys want to know what I'm trading on a day-to-day basis, if you guys want the daily newsletter, that's going to be the first link down below once again. And I was excited to make this one, and I hope you guys enjoyed it. Once again, I'll catch you guys downstairs in the comments if you want to talk shit about me, talking shit about Tesla. So I'll see you guys downstairs. Have a great Easter weekend, and yeah, cheers to you guys. Till next time, always remember, take action, make way. Oh, that side, make waves. Okay, peace, guys.